Hey guys, welcome to RSN Trade Breakdowns. So this is a channel which I've created to mainly show the breakdown of the trades which I've taken, the strategy and the overall thought process behind taking the trade. So this is the trade which I've taken on 6th February on a Friday afternoon London session, and I've taken the trade in gold. So the strategy behind the trade is pretty simple. So I used a strategy which is basically tracking the market from an internal liquidity to an external liquidity. So firstly, we will start off with the top down analysis. So when I went and checked the weekly chart, I saw that markets were kind of consolidating, but at the same time having a bullish bias in the current week. We can see that gold was on a crazy rally in the previous weeks, and then last week it kind of ended on a bearish note, but this week again it started going up. So I was having a bullish bias. Coming to the daily time frame, we can see that there was a fair value gap here, but since it was already mitigated, I did not mark the same. But overall we can see that beyond this bearish move, market was either consolidating or trying to have that upward momentum. Then coming into the 4-hour chart, again here also we can see that there is a fair value gap here, but since it was mitigated, I did not count it. And apart from that, I was looking for a bullish trade, because here also we can see that this big bullish candle kind of started giving that momentum for an overall bullish bias. And yeah, so now coming back, oh yeah, by the way, in the 4-hour chart, we could also see here that there is a 4-hour inverted fair value gap, and now that will act as a bullish momentum because it has an inverted fair value gap and not a normal bearish fair value gap anymore. And then coming into the 1-hour chart, I was around here when I saw that markets were trying to change, and like I said, there is a 4-hour inverted fair value gap which shows that there is a bullish momentum which is building up. And then finally coming to the 15-minute chart, wherein I was looking at the numbers. So this was the Asian high. If you have a look, this was the Asian high which I marked, and price was consolidating when the London session started between the Asian numbers only. And then from here, basically the strategy is that, like I mentioned earlier, market will always move from internal liquidity to external liquidity, and then from external liquidity to internal liquidity. What is internal liquidity? For me, internal liquidity is either a order block, a breaker block, or a fair value gap. What is external liquidity? It is basically higher highs or the higher lows, or the Asian high, the London high, New York high, Asian low, New York low, London low. Basically the end where market starts to change their direction is the external liquidity for me. So in the 15-minute, I have noticed that price is again on a bullish trend, and then I went to the 5-minute chart and I took the trade in the 5-minute chart. So basically here I could see that market was in an external liquidity, wherein price started to change from here. So I marked this area, and then when price started turning back from here, I marked this 5-minute bullish fair value gap, and then another fair value gap was there here. And since it broke this POI, I would like to say, and created a breakout structure, I was having a confirmation for a bullish bias. Then I was just waiting for the price to come and tap my fair value gap. Ideally, I should have entered here because this was a better fair value gap, but I wasn't sure if price would come back to this zone, and I didn't want to lose out on this trade. So I entered on this fair value gap, and I kept my stop loss at the swing low. And most of the times I try to take a 1:2 trade, and in this case luckily my 1:2 was exactly at the Asian high. So then I entered the trade, and luckily it hit my TP. And yeah, this was the trade breakdown for this gold trade which I took in the London session on 8th February. Thank you.